Franklin Templeton has wound up 6 credit risk schemes. This means that investors cannot redeem their money in these credit risk schemes. These 6 schemes are under kind of lockdown because the mutual fund, that is Franklin Templeton Mutual Fund, could not meet the redemption requirements, and they feared that any further redemption will only erode the value of the fund. Now, this has sent shockwaves because we are looking at 6 funds where the total assets under management are roughly about 25,800 crores just a day before the decision to wind up these schemes were announced. Now, what went wrong with these schemes? What is the management doing? Are there risky assets in the schemes? When I say risky assets, have they lent to borrowers who cannot repay in the short term? Now, these are very important questions and regulatory questions that we will discuss in this video. Let me now first focus on what went wrong. Now, these 6 schemes are credit risk schemes where the fund invests in papers below AA. Now, this is very, very common. But because of the unprecedented situation that is prevailing in the financial markets and in the country and in the world because of the lockdown, the management is saying that it's impossible to sell the assets or sell the paper, generate money and repay the investors when it comes up for redemption. Fair enough, that is a problem that everybody is facing. But I went into some details here, looked at the portfolio of each of these schemes, and I found something that needs to be asked and the management needs to answer. That is, the AMC Asset Management Company needs to answer. One common thread that comes through across all the 6 schemes is that they have lent money to the same set of companies. Now, it's fine, lending to same set of companies or investing in same set of companies might be common. But in this case, if I notice, they have, it's like a photocopy of the same list in each of those schemes. Maybe if you added here, there are about 10 to 12 such common names which appear in each of the portfolios. Now, what are these names? Let me quickly run through some of these names that I have in front of me. These names are Edelweiss Rural and Corporate Services Company, Renew Power, Pune Sholapur Expressway, Shriram Transport Finance, India Shelter Finance, JM Financial Asset Reconstruction Company, 5-Star Business Finance, Piramal Capital, Hero Solar Energy, and there are many more schemes because the list is very long. But the point I'm trying to make is that these are the common set of companies where money has been lent in each of these 6 schemes. Why this common set of companies? Perhaps the management would say that, look, last year they issued one particular paper that is raising money, and this year they would have issued another particular paper. Fair enough, this happens. But what are these companies? That is the second question I'm asking. These companies are in businesses which are in construction, real estate, financing, housing, power generation. All these are long-term infrastructure kind of companies which cannot generate cash in the short term, because these companies need large amounts of capital, because some of the projects that in a power company or in a road construction, they are long gestation, they cannot generate cash in the short term, which is why these companies, selling these companies assets in the market in this kind of a scenario is going to be tough. It will be tough even in normal circumstances, but then because of the higher yield, because the paper is risky, there might be takers. But in a situation like this, nobody will touch this. So what happens now? They have lent it to long-term companies, and how long will it take? We don't know. So risky businesses, same set of companies. 2 parts. Now, same set of companies, what does this mean? I also went into the details of the launch of each of these schemes. If I notice, the launch dates are very important, in the 6 schemes. in an interval of 5 years to 2 years, and in some cases even 1 year, because there is this ultra short term bond fund is also included there. These intervals, in regular intervals, Franklin Templeton has floated new schemes and fresh money has come in, and there is continuous supply of money to this set of common companies. So which means, and a question needs to be asked, is there evergreening of these loans to these companies? It's possible that last year they had to redeem, they need more money. The question is, there is a continuous supply of money coming into these companies, and it is from the mutual fund investors, and that money gets routed into different sets of paper floated by these companies once in 2 years or once in 3 years, as the case may be. Now this is the second part. Now the third and more important part is, how can short duration funds, out of the 6, 2 or 3 are short duration funds, how can short duration funds hold long term paper? Now this is yet another question we need to find out. It is very, very confusing. The answers are not very clear. Now this is the part as far as the exposure of this mutual fund is concerned. Now 3 important questions I want to ask. Can a mutual fund's aggregate exposure to a company exceed a certain limit? Within a scheme there is a limit of 10%, or in some schemes it could be even 11 to 12%. There is a margin that is given. Now, can we have an aggregate exposure like we have in the case of banks? Banks cannot do an aggregate lending of more than a certain limit, because RBI will come down and say that, look, this is the limit, you have crossed the limit. We don't have such kind of limits in the mutual fund industry. Now, more importantly, what is relevant to you? What is the way forward? The way forward is that this money is stuck. Now, why is it stuck? It's very clear. The management has explained that they could not sell in the market, and they did not also want to suspend, because suspending means only suspending for 10 days. For 10 days you can suspend redemptions. That is what the rule says. But this is not a short-term problem, because this problem is not going to go away. Fair enough. So they had to wind up. After winding up, it means that they are saying that they will actively manage. Now, actively manage means that they will find an opportunity every now and then when they get a window to sell this paper, sell it, accumulate money over a period of time. Now, in the current market, it's going to be very, very difficult for such companies, because these companies will find it difficult to generate cash. Now, generating cash even for a good company in the current situation is going to be very, very tough. Cash generation is not something that will be easy for most companies. We don't know how long this lockdown is going to be. We don't know when the markets will stabilize. In fact, even the fund managers do not know what they are going to do. In fact, I listened to their conference call the other day. I found that there was no clarity on the way forward, because we can understand they themselves don't know. But what are the key takeaways? Investing in credit risk fund blindly is very, very risky. Let's note down the lessons that we are going to learn from this. Number 1, if you're looking for high yield, you will have high risk. That's quite obvious. Okay, fair enough, you can take risk. But then what risk are you taking? Are you putting money in a mutual fund which is lending to risky businesses? Now, this may be a common practice in the industry, because there are a number of credit risk funds. This is beyond my beyond this video to go into those kind of details. But the question is, if you are investing in credit risk fund, this is a lesson that if there is a crisis, today it's coronavirus crisis, tomorrow it could be some other crisis, we don't know. When crisis hits, there have been several, in the past we have seen several crises. Every time there is a crisis, it is these kind of companies who will not get funding. Whether RBI opens a 50,000 crore liquidity window or not, it does not matter. Because who will lend to these companies? If somebody is holding a paper of a company which cannot generate cash, will you go and lend money to them? Ask yourself this question. Now, this is the kind of situation we are facing in the mutual fund industry, because what I'm finding it difficult to understand is that they will come back and say that we are one of the best managed mutual funds, and every fund will claim that their portfolio is very good. Now you need to go back and look at your own portfolio, look at quality, ask these basic questions. If you're putting money in a bond fund, ask this question: the money is being lent to somebody. The person or the company who is borrowing that money, do they have the ability to repay that money? It's as simple as that. If you cannot find this answer, you will need to put money in fixed deposit and be happy. Fund industries will keep coming back and they'll say, mutual fund sahi hai. अब क्या म्यूचुअल फंड सही है क्या नहीं है अभी तो पता चल गया है, आगे जाकर देखना पड़ेगा कि कैसे इन्वेस्टमेंट किया जाए. सो योर इन्वेस्टमेंट्स, यू हैव टू डिसाइड योर इन्वेस्टमेंट्स. डोंट गो बाय व्हाट अदर्स आर सेइंग. आस्क सिंपल बेसिक क्वेश्चंस व्हेन यू आर इन्वेस्टिंग इन डेट फंड्स, whether there is credit risk, interest rate risk or liquidity risk. In the current scenario, you are finding all three are there. So you might be stuck. Be very careful investing in debt mutual funds. So if you don't want to take that risk, simply put your money in fixed deposits. All the best.